This is Rodell, or you can call me Ro, the realtor that will save you time and money. And if you look at the thumbnail, you can see me in it. That handsome, amazing guy. Just in awe. Don't know what else to say about myself, because if I go on and on and on, it will take up the whole video. So we have to be aware and acknowledge that what we're in is a seller's market. And during the home buying process, the seller has the open hand during the transaction. So the seller can dictate what type of loan they're willing to accept, which would work to their advantage. So we have 3 government assisted loans. We have the NACA loan, we have the FHA, and we have the VA. The FHA is the Federal Housing Authority. The VA is for the military, and the NACA loan are for people who qualify for NACA. They usually don't have the down payment, and they want the lower rate because they're not able to afford the monthly payments of a mortgage of being qualified for a conventional loan. So the rate of a NACA loan is going to be lower than any rate going out there. So if you're qualified for a rate of 3.25 with the VA, FHA, or conventional, if you go to the NACA loan, you'll probably be qualified for a 2.32 or 2.5% loan. So you could get a house at $300,000 to $400,000 on a NACA loan and don't pay a $300,000 to $400,000 mortgage. Your mortgage would be more as if you purchased a $250,000 home, which is great for the buyer. But there are a lot of requirements and details when you go through this loan that are not going to be attractive to the seller who's trying to get the liquidity out of his house so they could make the next move. And the paperwork has to be lined up on a NACA loan. It can be pushed back if everything is not lined up or the paperwork is not in. It could be pushed back weeks or even months, which is going to be a headache for the seller. And if you're a realtor, you're going to advise your client about the whole situation dealing with the NACA loan, and it's up to the seller to choose that path. So then we have the FHA loan and the VA loans. They have requirements. It's a lot of underwriting for them because they have a lot of details and requirements because it is a government-backed or government-assisted loan. So whenever you deal with the government as trying to get money from the government or approve you for money, all the paperwork and ducks have to be in line. And underwriting could be a little bit more timely with these kind of loans. So a realtor would have to advise his client on all of the details with the FHA and VA loans. And there are clauses in FHA and VA that if the loan is not due to close on time, they can get an extension on closing. And also, if the buyer was to walk away from the loan or not want to go through with purchasing the home, they could get their escrow back, and probably even in some states they can get their due diligence back. So that wouldn't be an advantage of the seller, and a realtor would consult their seller or their client in regards to these type of loans that will work best for their situation. So the home buying process is really an advantage of the seller right now. And you have to, if you have one of these type of loans, you have to make it more attractive than having a cash buyer or a conventional loan. You might want to do something as give more money in due diligence, or give more money in escrow, or come way above asking price to make it more attractive so that the seller would say, hey, I can see myself accepting this loan because it will put X amount of dollars in my pocket.